Everyone, and welcome to this week's installment of Mish's Market Minute, hosted by StockCharts TV. I am Mish Schneider, and this week we're going to cover the small cap momentum stocks. Very interesting space. There are some stocks that are doing very, very well, others that have been correcting along with some of the other sectors of the market. Plenty of opportunity as we go into the end of 2021, and this will be a good look-see as part of our plan as we go into 2022. So let's get started.
Okay, so let's talk a little bit about the small cap momentum stocks and an ETF that really captures a lot of what I'm going to show you today. But also I've chosen a few other stocks beyond what's in the basket of VBK. But VBK has very heavily weighted with technology, healthcare, consumer cyclicals, and industrials. Exactly pretty much everything that is not doing well compared to some of the big growth stocks that we're seeing fly this week, as in NVIDIA after the great report, Microsoft, and Cloudflare, those kinds of things. So whenever we get it to a point like this where NASDAQ starts to outperform the small caps and outperform some of the key sectors like transportation, for example, which we've talked about, we kind of go a little bit caution here in terms of these momentum stocks, but nonetheless, we're at a precipice where it could be that we're just seeing rotation, and then that will adjust as we get into the end of the week and into next week. And if so, this is really where these small cap momentum stocks can be very exciting. The top holding in actually this particular basket is the US dollar, which has been extremely strong, possibly just ran into a lot of resistance. And the top stock is Charles River Labs, which is interesting. Every single one of the stocks in the VBK basket are in the United States, and there are 676 holdings altogether. No matter how fast I talk, we're only going to get to about 20 or 22. So let's get moving. I always like to show you the list that we do have a list in the PowerPoint that you'll be able to review of everything that I'm planning to cover. You can see some old faves are in there like Crocs, for example, Mara, which is Bitcoin exposure. So I think this is going to be a very exciting session with a pen and paper handy so that you could take some notes. So let's start with the actual VBK itself. I always like to show the ETF. And what's interesting is if we take a look at all the indicators, the plugins on the bottom, in terms of leadership, it's really been underperforming the S&P. But in terms of momentum, it started getting going. And then you can see now it's actually completely correcting down to the 50-day moving average in momentum, even though we haven't quite gotten down there here in terms of price. So to me, that would be an interesting place to look, that if it actually can hold here on the 50 and the momentum starts to improve, we may not see the 50-day moving averages as price goes. And if for some reason it does continue its downward spiral, you've got a long way to go before you see the Bollinger Band here and break the zero line. So I'm thinking that at this point now, if I had to make a bet, I would say it's probably more to the oversold side, particularly as it relates to the S&P 500. With a 50-day moving average, it gives us a unique opportunity to look at it as a potential buy with a good stop, say, under around 290. But I certainly wouldn't be looking to buy it right here on a falling knife, as they say. So I would like to see, my guess is we may see some kind of an inside day, the day you'll hear this video, which is on a Friday, which means Monday, even in a shortened week, if it breaks out over today's high that we're seeing right here at over 299.46, you might have a good $9 to $10 type of risk to see if this can actually continue to go up if the market does, and then break out to new all-time highs. So that's the actual ETF itself. Now, let's also look at Charles Labs very quickly just to see how things are doing. And I really like doing these in terms of discovery on as I am talking to you. I have not looked at these charts ahead of time. So it's good stream of consciousness for me, and also very often gives me some pretty good ideas as well. Now, I don't see anything that really compels me here, other than I will point out that we did have a actual mean reversion trade. Remember, I told you when it breaks the Bollinger Band on real motion and then comes back through and then breaks the Bollinger Band on the actual price and comes back through, then usually sometimes you'll get a good, interesting signal. At least in this case, it turned out to be more of a short-term signal, but it hasn't really gone anywhere other than it's holding the 200. We have a downward slope in the 50. To me, this wouldn't really get interesting unless for some reason we start to see a divergence in momentum, like it breaks out over the 50 before the price does. But at this point right now, you can see that it's kind of boring, which is why it wasn't one I was necessarily planning to feature, but one that we should have taken a look at as the top weighted VBK. This is more in terms of the momentum stocks, and this is Asana. This is tech. So is it any great surprise? We'd be doing a lot better than something like Charles Labs. Now, what is interesting in terms of the momentum here is that it's under the 50-day moving average in momentum, while it's over the 50-day moving average in price, and it's getting that classic inside day as I'm talking to you today. It did not have any kind of mean reversions trade here at all because it never even got close to its upward Bollinger Band. So really, essentially, in terms of the technology and software, we can see that it's outperforming the S&P 500. It needs to get a little bit better in momentum. And at this point, I'd really like to see it take out all this resistance that it has around 142.50. If it gets through 142.50, it's not that far away, then we could actually see another move up. We've had a tremendous amount of sideways consolidation here since October. So that means we could possibly see, let's say if it holds here at around 128, if it can get through that 142, and I wouldn't necessarily even risk that far, and that's not what I'm meaning to do, sorry, then we can actually see it get from maybe 142.50, maybe up another, I don't know, $10 to $12, which means it would probably get up to around 154. And this is how short-term I'm looking right now in some of these because of the fact of the time of year. Now, this to me is probably the most interesting of all. It's obviously tied to Bitcoin. This is Marathon Digital Holdings. And you can see what happened today. This thing has touched down on its 50-day moving average. To me, that's almost the most important level to be looking at in terms of if Bitcoin, which has been correcting and has broken down below 60, held about 56,000, which was its 50-day moving average. If this is reflecting that, and this actually holds up today, I'm not so concerned about its performance relative to the S&P 500, but it would be nice to see the momentum get back over that 50-day moving average. Regardless, you have a really good, interesting, tight risk to underneath the 47.35. If this continues to hold, I'd give it another day. And probably just in terms of good risk points, you can see all the support it's had here at around 49.50. I would probably say I'd like to see this get through maybe 50.65. And then you have a good risk to under that 47.35. So you're talking about $3 and change to see if you can get $6, which would certainly be very doable, particularly if Bitcoin starts to move back up. So I really like this one, and I think you should probably write that down. The next one is CERE. So this is another biotech healthcare stock. Now, what's interesting about healthcare is that healthcare, of course, can be impacted by many different factors in the economy. So this is really, you can see where it's been under a lot of strain. However, it also broke down under the 50. So we really want to see this get back over the 50 and let's say back over 37.50. And of course, we'd want to see some improvement in momentum. I don't think we have to worry too much about the leadership, but nonetheless, this has been a good stock. And this was a stock that actually our small cap momentum model got into and caught a big bulk of this move and now is out of. So if it sets up again, I would certainly keep my eye on that. Next one is MXL. So this is another one. Notice the difference. This is in the tech semiconductor space, Max Linear. Now you could see how well it's outperforming, but we did get the potential here of some resistance at the Bollinger Band. even though we made a new high today, it's come off a little bit. So what I'd like to see in this one is, rather than a chase type of situation, I'd like to see what happens if it can get back down. You see these two shooting stars here? If it can get back down somewhere, I'd say between 68.40 and 69.40, then I think you have a better opportunity of risk. Otherwise, we'd have to see a close on the new highs today. So the new high would be over 72, let's say. And then if that happens, I would use that 69.50 as a potential risk for a more active trade to see if it can get up closer to this Bollinger Band here at 77. Now, the next one is a very popular stock that's been also all over the map, and this is Upstart Holdings. So this is financial consumer finance. And what's interesting is I read a whole article today about how the younger generations are not using banks. This is something I actually wrote about years ago, but now it's really come to fruition with technology. And instead, they're putting their money more in institutional type tech places like this one. Upstart would be one, but you can see that it's just fallen out of favor lately. And we don't have enough information here on the momentum to give you any kind of real sense in terms of moving averages, but it is holding above the 0 line. So I would say in this case, where it has to get back over to start looking interesting again would probably be back over this 250 level. If it gets back through 250, you've got 225. Now that's a $25 risk. I probably wouldn't want to take that. So I would say if it gets back over 250, I would be more inclined to risk, say, to under this low, 240. $10 risk is certainly manageable to see now if it can get back up closer to 300 or even take out that 50-day moving average. If you wanted to wait, then you would have to wait all the way up here, but you can see now that that would really extend your risk. So I'd almost be willing to take the chance over 250, risk 240 to see if we can get back up $50 to that 300 level. Next one here is another interesting one. A lot of these momentum, small cap momentum stocks have gotten a lot of buzz lately. This is GreenSky, another tech stock, underperforming the SPY, has come off a lot in momentum, holding the Bollinger Band. And you can see here has also, just like I showed you with Marathon, gotten right down to the 50-day moving average. So of course, this now turns out to be key. If it can hold the 50 and take out 1165, then you have a pretty decent tight risk. I mean, literally you can risk like 30 cents, or I would probably give it a little bit more to see if this can head back up to the highs and beyond. This is definitely one to keep an eye on as well, because I like when you can get that kind of good risk where you know right away if you're wrong. RVLV is another one. Now, this is consumer discretionary. This is the Revolve group. This obviously has done very, very well. Look at this, making new highs here today. Would I chase this one? Well, look, the momentum is not nearly as good as what the price is doing. And of course, you're going to have some resistance here. So I don't know if I'd necessarily want to get involved at these levels, but it's certainly a good one to watch to gauge how the overall consumer discretionary space, which has been strong, is doing. And the next one's actually Coca-Cola. Now, Constellation Beverages have also taken a nice big move up over the last several days. So this is really a staple. And I've talked to you a lot about the consumer staples versus the consumer discretionaries. Consumer discretionary is still really outperforming the consumer staples. However, if that's going to be something that changes, it's going to be because people are going to buy what they need and not necessarily what they don't need as inflation takes hold. So if that's the case now, what we could have here, I wouldn't necessarily want to be chasing it, but look at, you have a very interesting move here right up to the Bollinger Band. I would actually like to see this make some kind of correction before I get involved. You can see it's really very, very overbought. But nonetheless, very interesting. And of course, I could be wrong. This could get back through 550 and keep going. So let's take a look at AQUA. That's another one. This is in the water space. This is Evoqua Water Technologies. Now, water is definitely hot anyway. It's another commodity. It's another one that is obviously something of a concern, particularly if you live in the desert like I do, but also broke out of this Bollinger Band today. So could still really be an opportunity at this point as a small cap momentum stock, particularly if it holds today's low at 47.70. That's also right where the Bollinger Band is. And if that's the case, again, this would be more of the type of situation where I would have very tight risks for a momentum play to see if you can get more to the upside. So the next one here is GSAT. This is Global Star Mobile Communications, completely different of what we've just been looking at. So you can see what sectors are doing great and what aren't. Now, of course, in the beginning of 2021, this thing did amazing. Now, what's interesting is with the 5G as part of the package, that could actually wind up turning around. And this is a really cheap stock. I mean, if you take a look at this one, it's $1.52. But some people like to trade those cheap stocks. So I would wait for this to break back over the zero line for one. You do have the 50-day over the 200 and it's sloping down. So I would want to see this hold around 148 and maybe clear back over 160. And then maybe you can get a move back up closer to 2 or 225. Cheap stock. Next one has been so madly popular through the years, which is consumer discretionary Crocs. Now, what's interesting with Crocs right now is you're getting a period of consolidation, which is good because once you can establish some kind of an interesting risk, and this point it would be at around 171, with an inside day forming, if you wanted to take a chance, you can buy it over 181. So a $10 move risk on a $177 stock isn't bad to see if you can make $20. You want to try to make at least 2 to 1. Could this go to 200? Absolutely. Now, what's so also interesting to note here is that it's sitting right on the 200-day moving average in terms of momentum. So the momentum here is showing the sideways action. So it could easily go above all of this and on to 200 and beyond, as it could also easily break back down and start testing back around 154. So keep an eye on these sideways action type situations in these momentum stocks. Next one is Livent Group. So this is materials and special chemicals. A lot of these stocks are definitely industrial based stocks that could have exposure to the infrastructure package once that gets going, which is why they're so interesting to watch at these levels. So right now, this is sitting right on the Bollinger Band here. Momentum has come off, but still well above the moving averages. It's today underperforming the SPY. I would say I'd be keeping my eye here on any downward pressure closer to the 50-day moving average to see if it either tests or holds. Then I would be more interesting. This would not be a stock that I would be too worried about chasing strength on. I guess you can say at this point it's been under 30, which has been pivotal for the last several days. With this day was the last time it touched 30. So maybe if you wanted to look at this, it would have to be a move over 30. And then I would probably have a risk to, like, let's say under this low at 28.70. Next one is MPWR. And look at that. This one actually almost had a mean reversion, didn't quite cross the Bollinger Band here on real motion, but it did on the price and now is coming off. So this is another tech semiconductor type of stock and trading, well, in the 500. So this has certainly been a hot stock. But I would actually prefer to say what happened at this high here at 550, 551 is what I would wait to see if it comes down to. I would not be interested in chasing this one, rather buying this a little bit on weakness down there. Next one is Corvell. So this is in healthcare. And interesting, look, this one's actually doing pretty well compared to a couple of the biotech stocks we just looked at, being Charles River, et cetera. So this is actually green on a day when the market is actually red, except if you're in NASDAQ or SPY. And so I would say right now we've got a good situation where you want to see it hold around 187. If we look back at just this week, this sort of doji day, we had the open around 193. It's trading right there right now. I would say if it holds 193, then you could probably say maybe this has legs to get above 190.26 and 199.26 and 200 and keep going. And if you want to buy it above 193, especially as you see this tomorrow, I would say that you probably should risk anywhere between 186 and 188. Okay, next one is NTLA, another one that I've seen a lot of buzz about. This is interesting. This is Therapeutics, another healthcare stock. And I love this chart. Why? Because the 50-day moving average has really not only been a point of resistance, it's almost acting like a trend line here, connecting not quite the high of this day, but you can see over the last couple of days, as it's been underperforming, but not too badly of the SPY, and the momentum is kind of leveled off here. So, I mean, you could have the classic divergence where this clears the 50-day moving average and momentum before the price does. Otherwise, this is very simple. I love these simple charts. Simply means that at this point, you want to wait for two closes back over that 50-day moving average, even though it's sloping down. And then whatever the low is on the day it clears becomes your risk to see if you can get some momentum to the upside on this one. So this is also one of the cleaner charts I showed you since I've showed you MicroStrategy. Innovative industrial properties is real estate. So real estate has come off a little bit here. Again, a very nice gentle correction as far as I can see. It's still outperforming the SPY. And again, we didn't quite have the pure mean reversion trade. We had it in momentum, but not in price. So at this point, you want to make sure that this actually holds up momentum here. And if it does, then I would say that if it can get closer to this Bollinger Band here at around 271, that would be one thing. And if it doesn't, then it's kind of a sloppy chart, but I would say maybe a move back over 280 with a risk to under whatever the low is, $5. That wouldn't be bad to see what this one has going forward, as it's been a hot player. Next one is RPD, Rapid7, another technology stock, not doing as well as the rest. This one did have a mean reversion trade. See how it went through the Bollinger Band here in price and in momentum and then came back through. However, now it's holding the 50, is slightly underperforming the SPY, but it's getting a nice bit of sideways consolidation, and it's certainly in the right area of tech and software. So if this one can get back through 133.56, you have a really good opportunity to risk to, let's say, right under 129.75. to see. Now that's unbelievable if you can get, a $3.5 risk in a tech stock. And then your next really good point of resistance is 140, which means you get a good risk reward. I would say this would be another one of my favorites to keep an eye on today. This is another really good stock to keep an eye on, Repligen, because same thing I mentioned to you before. We've been up and down around the 50. We broke down under the 50. And now today we've tested that 50-day moving average. So this is another one. Momentum's not bad. It's over the 200, not over the 50. You can see one good push. It can start to outperform the SPY again. So I would say let's look for a couple of closes over 281. And then you could risk to either under 267 or whatever the low is of the day that it actually does confirm back over that 50-day moving average. Couple of more left here. We've got RRR, Red Rock Resorts. So this is tied to gambling. I had been watching LVS. It's been one of the choppier stocks to trade. This has been a little less choppy, so this is a good one to keep an eye on. Notice how it broke down under the 50, is back over the 50, trying really hard to confirm here. So as far as I can see, I like this Bollinger Band here. If it not only confirms back over the 50, I would wait for this to clear, let's say 52.64, and then you would have a pretty good risk to under 51. Again, anything at this time of year when things are getting volatile that gives you a risk that's so tight like that you know right away if you're wrong is good, and also means that you don't have to have a lot of upside to start taking some profit. So this is another one I would keep on the list. And the last one I'm going to show you today is consumer discretionary recreational products. Now we're going into the winter. It's interesting that we would have a pool stock doing very, very well, but there you go. I'm not sure exactly. I haven't done any research on this company. Now, you could have a mean reversion trade, so that's something to keep aware of, in which case you'd be buying into the resistance. But I'd say maybe down to 550, I'd be interested in here. And if you really think this thing can explode at this point now, would have to take out this 580, 175. And then, you know, when you get into that uncharted territory, it's hard to know where this thing could go. You can see if I scroll back, this is on new all-time highs. So I guess the conclusion of all of this is that some of the momentum stocks have corrected, like Marathon. I just showed you, like Red Rock Resorts. I just showed you. There was a couple of others that looked good, like NTLA. Others like AQUA have already done very well. Asana has done very well. Upstart could be something to keep your eye on. The point is that there's a few in everything that I've covered as we looked at the space that proves to you right now that it's very much an individual stock thing. Some tech is doing great. Some tech is not doing so great. And as far as ideas, hopefully we've generated enough so that you have some kind of a plan over the next couple of weeks based on this information.
Okay, that's a wrap, everyone. Hope you enjoyed it, got some good actionable ideas, and I will see you all in a couple of weeks. We'll have an evergreen video for you out after the Thanksgiving. You all have a great holiday. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.